You're watching Business Incorporated live on Channels Television. Coming up on the program, IATA ranks Lagos and Abuja airports world's most expensive airport with 27 levies. And Kenya tops East African states in private equity and venture capital deals. In Uganda, offshore investors return to equity markets following the World Bank-inspired exits. Hello, welcome to the program. I'm Ladi Williams. As always, let's get a check on the markets now, starting on the African continent. We see the NGX there not looking so good, but it's positive sentiment right there on the African continent with the NGX 0.16% down, pullback right there at intraday. And the South Africa index, that's up 0.81%. In Kenya, we see it's closed marginally down yesterday. The EGX looking better right there, 1.22%, 19,598 points. Let's head on to the Middle East now. We see it's mostly negative sentiment right there. The Abu Dhabi index, the lone gainer, is up 0.10%, while the Dubai index is down 0.5%. In Saudi Arabia, we see it's also down 0.19%, and the Qatari index follows with 0.48% decline at intraday. Let's get a check on Europe now. See, the European Commission is planning to impose punitive tariffs to protect European car makers from the flood of cheaper Chinese electric vehicle imports. Let's join Lars Halter right there in Berlin. Great to have you, Lars. So what's the story like there? What can you tell us about the Commission's plans?
Yeah, hello, Ladi. Thanks for having me. Yes, this really came as a huge surprise out of Brussels. The European Commission says that China is illegally subsidizing its electric vehicle builders to a point where they have an unfair advantage selling their cars. Now, there is definitely good reason for the Commission to be concerned. In recent months, Chinese car makers have reached a market share of 8% within the EU, and if that trend were to hold, China's market share could likely rise to 15% very soon. That's according to some car market experts. And while Chinese EVs are known to be reliable and they've done very well in testing, it is safe to say that their much lower price tag also has a lot to do with that incredible growth. Now, why are these Chinese cars so cheap? Because according to Brussels, Beijing is subsidizing car makers every step of the way along their supply chains. There's prioritized access to resources for battery and car makers. There's financial help for software development. There's also direct payments. There's below market rate loans. And there's also Beijing even taking a stake in a car maker. So this all adds up to about a fifth of a car's price, says the Commission. And it obviously seems like it gives Chinese firms an opportunity to sell their cars in Europe at prices the car makers here just can't compete with. So to protect European car makers, the Commission wants to hit Chinese car imports with a levy. It would then make them more expensive to sell and kind of level the playing field.
I guess Beijing has given a lot of support there for EVs, but what's the reaction from European car makers?
As a matter of fact, they hate the idea, at least the German car makers do, because one thing is sure, if the EU hits Chinese car makers with punitive tariffs, Beijing will certainly not just pay up. It's definitely more likely that China will in turn hit European car exports with punitive tariffs too in retaliation. Now, that would definitely hurt sales of German cars on the Chinese market, and that is the world's biggest car market, and it's also one where Germany has already dropped in terms of relevance. So with German car makers being against any action from Brussels, one has to wonder who is really behind it, and many are pointing the finger at France and President Emmanuel Macron, who has long been advocating for a more protectionist course when it comes to trading with China. Now, French automakers would likely not worry about tariffs much. We're talking about Renault as well as the Stellantis group, which covers Peugeot and Citroën. They all don't play much of a role on the Chinese market, so they also would not any significant losses here. Outside of France and definitely in Germany, many are alarmed. However, Mercedes is afraid of a tit-for-tat trade war. And it's not only car makers either. Car supplier Bosch also says that tariffs would likely lead to counter tariffs and that such action would lead to everyone in the market losing.
All right, let's take a look at what's happening with traders there. What are investors looking at in today's market?
Well, it's all about inflation and interest rates today. Markets in Asia and Europe opened a little higher, but that's after we learned that inflation across the US accelerated in August, but not by much more than expected. That eased worries over the likelihood of another interest rate hike by the Federal Reserve. Meanwhile, the European Central Bank is discussing its own monetary policy today in Frankfurt. Analysts are pricing in an around 65% chance of a 25 basis point rate hike here. And that would be for the ECB to take another step against inflationary trends in the bloc. However, analysts also think this should be the last rate hike for a while. Let's see what we're getting later in the afternoon when the ECB decision will come out.
All right, every investor looking out for forward guidance, what's going to happen with rate hikes going forward. Thank you so much. That's Lance Holter right there in Berlin. Let's get a check on the U.S. now. We'll see stock futures climbed today early in the morning as traders prepared for the August producer price index as a measure of wholesale inflation. We see futures tied to the Dow Jones Industrial Average. That was up 0.29%. The S&P 500 futures was also up 0.39%. The Nasdaq that was unchanged much earlier, but now we see it up 0.41%. So we're looking at how the markets closed today. During Wednesday's regular trading, the 30 stock Dow that stumbled for a second consecutive day, dropping 0.2%, dragged down by 3M. The Nasdaq Composite closed higher by about nearly 0.3%, while the S&P 500 added about 0.1%. Let's get a check on Asia now. See, Asia Pacific markets mostly rose, even as the inflation in the U.S. We see the rate for August came in hotter than expected at 3.7%, compared to economists' expectations of 3.6%. And the Dow Jones survey. So in Asia, there we're seeing month on month the consumer price index that rose 0.6% in August. But we see the Nikkei just up 0.46%. Big move. Kospi 1.51%. Close HSI up 0.21%. In Australia, the ASX 200 not looking bad right now. So we're seeing green on the screen at this point. Let's get a check on global commodity markets now. Joining me, I have Sunil Dixit, Chief Technical Strategist, SK Charting. A lot is happening, definitely in the commodities market. Great to have you, Sunil. So the bulls look like they're in control of the oil market right now. What are the charts showing you?
Well, as far as gold is concerned, the data for retail sales as well as initial jobless claims have stumped gold to its nearest downside target of 1900. And as you have seen, 1915 and 1920 have posed as immediate resistance. So as long as these resistance hold on the hard side, we see some more downside coming on the way that can take gold a little bit lower to, let's say, 1890 and 1880 in the time to come.
But looking at the oil market now, we see it's trading about $92 per barrel. Where do you see prices topping for Brent and WTI in the short term?
Well, I've been tracking mainly WTI, and the higher side I see 93 to 96. As long as on the support side, $85 level holds.
And I'm talking about oil prices now. Where do you see $100? Do you see $100 hitting this year?
This possibility of $100 cannot be entirely ruled out. But yes, 93 and 96 are going to be an interim resistance zone. 93 and 96.
$93 and $96. All right, let's look at the gold market now. What's driving sentiment in the market? We got that U.S. CPI data for August, hotter than expected, but is that really pushing sentiment for gold?
Sentiment for gold is going to be a little bit bearish in the near term, and safe haven appeal is missing from the market, and whatever money flow is going into energy, especially in oil, is driving traders away from gold for the time being.
So
and the downside has to time.
So as long as bullish sentiment continues in the oil market, I guess traders are going to move away from gold.
Sure.
All right, let's look at the dollar index now, the DXY. How's that looking today?
Dollar index has shown some resilience, especially after the data has come. And on the higher side, dollar index futures, which is signaled by DX, it has a resistance of 104.75 and maybe heading for 105. On the downside, 104.11 has given dollar index futures some support on the downside. But if for anyway it breaks above 105.15, there's going to be more up move in dollar index futures. On the downside, break below 104.15 will bring more downside to, let's say, 103.50. But at the time being, it's holding on strong.
Right, and do you see the dollar giving us a rally like we saw in 2022? Do you see the dollar rallying, into the end of 2023?
There are less chances of dollar rallying further above 105.5, and by the end of 2023, I think dollar index future should come below 103.
All right. Well, we'll keep tracking all of that because we know investors do react when the dollar, strengthens, and we see that impacts all other markets, especially oil and gold. Thank you so much, Sunil Dixit, Chief Technical Strategist, SK Charting. It was great having you. Thank you.
Thank you.
And Nigeria seems to take advantage of the forthcoming intra-Africa trade fair in Cairo to deepen the spread of its products and services across the continent. The Executive Director and CEO of Nigeria Export Promotion Council, Mr. Ezra Yakusak, referred to this during the high-level business roadshow to highlight the importance of the country's participation at the fair. In this regard, he says an interagency committee, which includes Nexim, SMEDAN, and BOI, has been put in place to drive the country's successful participation and realization of its over $18 billion target. Do take a listen.
The Nigerian Export Promotion Council has, through its various programs and initiatives, built capacity of SMEs to enable them increase and improve on their products' quality and quantity in readiness for the challenges thrown up by the African Continental Free Trade Area and preparatory to the IATF event in November this year. These include emphasis on value addition, quality/standard requirements, certifications, and improved product packaging for international markets. Similarly, the NEPC has commenced mobilization of various stakeholders to ensure Nigeria's adequate participation in this forthcoming IATF in Egypt. We have also commenced the process of selecting exhibitors with a view to ensuring that the right products and services are displayed at the event. Distinguished ladies and gentlemen, due to Nigeria's strategic position as a giant of Africa, the expectation on us is high. We should therefore take advantage of the IATF to showcase our vast resources in agriculture, solid minerals, entertainment, information and communication technology, fashion, the creative arts, and attract trade and investment into our country.
Welcome back. Well, the global price of natural gas has recovered after sliding to a two-month low of about $2.03 MMBTU in August to the current price of $2.70 MMBTU. This represents about 17.39% increase. That's a big jump there. Let's talk to Victoria Momo, analyst, financial derivatives company. Great to have you, Victoria.
Hello, Ladi. Good afternoon. Thank you for having me.
So, quite interesting. Looks like we're seeing a big rally there with natural gas. I remember it did hit a high of over $10 in 2022, but it's come back down to reality now. So is it Saudi Arabia's decision to extend its crude oil output cuts until year end? Is that what's driving sentiment with natural gas?
Thank you very much for your question. So it is true that Saudi Arabia actually, extended its oil output cuts to December this year, and that is having an influence in overall energy markets, including LNG. It's driving the sentiment, it's increasing concerns about supply and prices of energy are actually rising. For example, Brent has crossed $90 per barrel, and LNG has also increased. But while this Saudi Arabia oil output cut is actually a contributory factor, it's just a piece of the puzzle. We have the workers' strike in Australia natural gas facility. There's also increasing concerns about the supply of gas, because Australia is actually one of the largest exporter of gas in the world. So the workers' strike in Australia actually is supporting the demand the supply concerns, and also driving prices of LNG higher. Aside from that, we also have this hotter than normal summer in regions in the US, which is also boosting the demand for LNG to power generators and also generate electricity in those regions. So that's supporting the demand for gas and also increasing the prices. And it's expected that these factors would actually contribute to the price of LNG and keep it elevated in the near term. US EIA, that's the Energy Information Administration, has actually forecasted that the demand for LNG is going to stay elevated because of the hotter than normal weather conditions in the US, which would trigger the demand for LNG and also boost our prices.
Yeah, from where you're looking, do you think there's any chance natural gas prices might get back to that level we saw in 2022, about $10?
It's very unlikely for it to get to $10. As of now, it's trading between $2 to $2.07 and just above $2.07, but it's unlikely to get to $10 because we still have the issue of the demand basically is not as strong as it was as at last time. There were a series of factors that actually contributed to the spike in prices of last year, and that is the Russia and Ukraine war that actually led to massive shortage of gas and caused gas prices to rise. And then we also had the issue of Chinese COVID-19 that actually resurfaced as at last year, and also weighed on the demand and all of those things. So those things actually contributed to the spike in demand for natural gas. But this time around, we are still seeing that back to $2 level, but of course it will still remain above $2 for now to the end of the year and even into 2024.
Right, I guess we'll keep watching what drives sentiment in that market. Traders are definitely watching out for natural gas next. But let's look at Nigeria now. With the sixth largest LNG exporter, do we have the opportunity to leverage the expansion to solidify and increase our position when it comes to LNG exports?
Yeah, of course, we have what it takes, and there is also opportunities that are, surfacing for us to take advantage of. I mean, the EIU has estimated that the demand for natural gas is going to increase, this year. We're going to see a recovery in natural gas demand this year and also into 2024. So it actually presents an opportunity for Nigeria, in terms of, boosting gas production in order to take advantage of the rising demand. We could also improve the sustainability and quality of our gas, so that the reputation of Nigerian gas would actually, be enhanced in the global market. And then we could also, partner with international buyers, investors, in order to secure long-term contract and investment in, our gas sector, so we can improve the production of gas and take advantage of the rising global demand of gas in the global market. In addition to that, we also have boosting the gas infrastructure here in Nigeria. So if we could, improve the gas infrastructure, in terms of the export facilities, in terms of storage facilities, to improve the transportation of this gas to, the export market, we could actually, take advantage of that growing demand and also earn more revenue.
And what's happening with gas flaring? They did lose about 34.1 billion due to this. What would you say the government has done so far to, get us profiting from it?
Well, there has been a series of, attempts made to reduce the rate of gas flaring, but it's still a lingering issue in Nigeria. I mean, like you rightly said, we lost 34 billion naira in July 2023 alone, and this trend is likely to continue if we don't tackle the issue of gas flaring, and that is because we lose a whole lot of gas in the process of extracting oil, and but these gases can actually be trapped and actually be used for industrial purposes, can actually be commercialized and also liquidified and exported to the global market in order to earn more revenue, especially at this time when we are facing this revenue crunch and the likes of it. In addition to that, we could also engage in gas to power initiative, that is converting these natural gases to electricity. We have this demand and supply gap of electricity in the country, and this gap is being met by diesel and petrol generators, which is currently squeezing incomes and profit of consumers and businesses. So we could actually invest in the gas to power initiative, convert these natural gases to electricity, and we can say that this would to some extent solve the electricity problems that we have, since 80% of the power plants in Nigeria is actually fueled with gas. And then the government could actually come in by also putting very stringent policies to ensure that to discourage gas flaring generally, and to ensure that there is responsible gas usage and utilization and the likes of it. And we could also borrow a leaf from Colombia. The country has successfully reduced gas flaring by 60% from 2015 to 2021, and they did it by implementing a series of policies. One is stringent policies to ensure that these gases are not wasted, right, and also domestic development of infrastructures, gas infrastructures, encouraging the use of the industrial and residential use of gases, and even going as far as ensuring that the companies, oil companies, actually present a plan to show how they are going to utilize this gas just to avoid wastage. So we could borrow a lead from.
Oh yeah, definitely. So much to do there, because we need all that foreign exchange company. Thank you so much, Victoria Momo, analyst, financial derivatives company. Thank you.
Thank you for having me, Rabbit.
All right, so the International Air Transportation Association has ranked Lagos and Abuja airports as the most expensive airports to operate in terms of levies and tax charges in the world. Mr. Kamil Al-Awadi, the Vice President of IATA, Africa and Middle East, in his presentation confirms that the Nigerian airports charge foreign airlines about 27 levies, which makes it the most expensive in the world, discouraging airlines from flying into the country. And Kenya has accounted for the lion's share of private equity and venture capital deals in East Africa in the past decade. And that's according to Africa Venture Capital Association. The data shows that Kenya accounted for 69% of the 478 private equity and development finance institutions investments between 2013 and the first half of 2023. These deals incorporate both inward investments and exits in terms of monetary value, and Kenya has accounted for 74% of the total disclosed deal value of $8.6 billion, ahead of Uganda, Ethiopia, and Rwanda at 8.75% respectively. And the Bank of Uganda says offshore investors have returned to the securities market with inflows of $200 million. The bank confirms this is due to high returns in government debt held in treasury bills and bonds, which averaged 15.5%. The increase follows announcements by the World Bank last month that created uncertainty in financial markets in Uganda, which led to sell-offs. And that's it on Business Incorporated. Thanks so much for watching. I'm Ladi Williams. Bye for now.